Thank you so much, ladies and gentlemen, and welcome again to another episode of our financial intelligence classes. Now, today I bring you some very good information to do with borrowing from financial institutions such as SACCOs and banks. SACCOs and banks. Now, very good information, something that you didn't know about borrowing from SACCOs and banks. And it's something that probably you have heard of people talking about, and it's known as loan top-ups. Loan top-ups. You've heard of people saying about topping up a loan. Probably you've taken a loan from a bank or a SACCO, and then probably you took like 5 million, 10 million, 20 million, depending on the amount of money that you took from that financial institutions. And then you've heard of someone talking about, I want to top up my loan in my bank, or I want to top up my loan with the SACCO that I normally operate with. Now, some people wonder, how do people top up loans, and what are the advantages of topping up loans, and what is that convenience that is brought about by loan top-ups by financial institutions? Remember, it's something that was introduced by financial institutions such as SACCOs and banks. And therefore, ladies and gentlemen, today I want to explain to you what is the meaning of a top-up, how it works, and how you can benefit from it. So that if you didn't know about loan top-ups from banks, from SACCOs, from any other financial institutions that is going to operate with credit, so that you can know now what is the meaning of loan top-ups. And ladies and gentlemen, I'm going to explain this in a very simple explanation with simple examples here, so that I can show you how loan top-ups work. Now, before I even continue, ladies and gentlemen, my name is Sir John Mweri. If you are seeing me for the first time, my name is Sir John Mweri. I'm a professional accountant with Xfinop Accountancy and Insurance Consultancy. And this is what we normally do. Come here, discuss about money, educate each other on how we are supposed to perfect our financial path. Remember that you have not followed me. This is another very good reason that you should stay subscribed in this particular channel. Make sure that you share this particular video to any other person who you feel that may be interested in knowing this particular information. Just a minute, I pick my calculator here so that I may not forget. All right, ladies and gentlemen, remember to share the video to so that we can have our society educate. Now, let's talk about loan top-ups. What are these? What are loan top-ups? Loan top-ups. Loan top-ups. Now, ladies and gentlemen, let me just give you a simple scenario of how a loan top-up is going to work. Assuming that you have taken a loan of, let's say, 5 million, or I can just write it as a whole, 5 million from a bank or a SACCO. You have taken a loan of 5 million from a bank or a SACCO. And then this bank or SACCO, it's giving those services of loan top-ups. So a bank or a SACCO has told you that once you have taken that 5 million, after paying for a certain period of time, you can top up the loan. Now, what is the meaning of top-up? Now, this is what the top-up means. That after paying, probably, let's say that you are paying this loan, 5 million, repayment period was, let's say, 5 years. Yeah, repayment period was 5 years. Or you can say 8 years or 10 years, whichever the period that you had agreed, or what was the contract or the agreement between you and the lender. Now, repayment period was 5 years, probably with an interest rate of let's say 12%. Others are going to display it like okay, we can say 12% on a reducing balance method. Reducing balance. If you don't understand what is reducing balance is where the amount that you normally pay per month reduces on a monthly basis. Now, what makes the amount of the amount or the installment that you normally pay per month to reduce. It is the reduction in interest, because it normally combines the first installment with the second installment, and then you do the calculation of 12% and then you reduce. I'm going to do a video on the type of loan repayments method, so that you can understand. We have reducing balance method, we have the flat rate basis method, we have the amortization method, and so on. And I'm going to show you how they normally affect the loan that you normally pay. Because remember, when you're taking a loan, you are supposed to know the dynamics of that particular loan. You have to know the interest rate, the repayment period, the mode of payment. Is it on a reducing balance basis? Is it amortized, or is it flat rate? A lot of people have paid a lot of interest because of taking a loan on interest that is on flat rate, because flat rate is going to be very expensive, but reducing balance and amortization is going to be a little bit cheaper. Now, leave that one for now. I'm going to do a video on that, and I'm going to educate more about loans. So repayment period is 5 years. Interest rate is 12% on a reducing balance. Okay, some organization or some banks or SACCOs are going to tell you, you are going to pay this loan with an interest rate of 1% per month, with an interest rate of 1% per month on a reducing balance method, So it's all the same, because if you multiply 1% times 12 months, that is 12%. So ladies and gentlemen, those are the dynamics of this particular. So you took a loan of 5 million from a bank or a SACCO. It has a repayment period of 5 years. The interest rate is 12% on a reducing balance, or 1% per month on a reducing basis method. Now, someone tells you that you can top up this loan. How? Now, how are you going to top up this loan? Now, when it comes to top ups, it depends on the policies of that SACCO or the policies of that bank, and what are the requirements that you're supposed to have met, because of course there are some requirements that you're supposed to meet so that you can top up that particular loan. But before I tell you the requirements, I am going to show you what top up actually means. Now, let me get rid of this so that you can understand better. Now, because you have understood the loan is 5 million, interest rate is 12%, and repayment period is 5 years. Now, this is what top up means. Assuming that you have paid this loan for how long? You have paid this loan for only 2 years. You have paid this loan for only 2 years. So this one is paid period. You have paid the loan for only two years. And assuming that you are paying an installment of, let's say, 5 million, let's say an installment of 150,000. 150,000, and you have paid it for 2 years. 2 years. So you have paid a total installments amounting to, so you multiply by 24 months, because 1 year is going to have 12 months, so 2 years is going to have 24 months. So you have paid a total amount of, just take your calculator, 150 times 24. That is 3.6 million. You have paid a total amount of 3,600,000. You have paid a total of 3,600,000. I'm just taking an example. It is just like, you know, it can, because if you see like this one's 150 times 24, 3.6 million, you see it's only 1.4 remaining, so that you can pay the whole amount. But you can find yourself paying around 120,000. Okay, to be realistic, we can take maybe 110,000, 110 or 115,000, 115,000 times 24, so that we can be a little bit realistic, so that we may not overdo the figures. Let's take 115,000 per month as an installment times 24. You have paid for 2 years. 115 times 2, that is 230. That is that is 115 times 24. That is 2.7 million. Now you have said you have paid a total amount of 2.7 million for 2 years. That means the remaining amount is 5 million minus 2.7, which is equals to, is it 2.3? I think it's 2.3 million. So you've already paid 2.7 million. So whatever is remaining is 2.3 million for how long? 3 years. 3 years. 3 years is remaining. Remember, you've already paid 2.7 million for 2 years. Now what is remaining is 2.3 million for 3 years. All right. So ladies and gentlemen, this is how the top up is going to work. So the bank or the financial institution or you yourself, you need some money, but you are wondering, how do I get extra amount of money? And I already have an existing loan that is running. Now you start disturbing yourself. You ask yourself, how am I going to qualify for another loan in the same financial institution? And at the same time, I have another loan that is running. Now that is how you do it. Instead of thinking of taking another loan, why don't you think of topping up the existing loan? How are you going to do this? Now remember, the initial amount that was borrowed was 5 million for 5 years. You've already managed to pay 2.7 million. Whatever is remaining as the outstanding loan balance total is 2.3 million. Now, why don't you decide to top up this amount to even, it can be higher than, it can be back to 5 million, or it can be even higher than 5 million, probably 6 million or 7 million, depending on the policies of that organization. So this is how they are going to do it. The organization or the bank or the SACCO, they are going to consider the loan that is existing, and they are going to tell you that you are going to give you a top up of the existing loan. So they ask you, how much do you need? Oh, I don't need a lot of money. You can take it back to 5 million. So they are going to give you 5 million Kenya shillings again, but you will have to do a new application, or you do application afresh. You do 5 million application afresh. And then the remaining, the outstanding balance of 2.3 million, they are going to clear it for you. They clear it for you. Remember, you need money, but you have an existing loan balance in that SACCO, in that bank. All right. So what they do, they give you 5 million again, the original amount that they had given you earlier, but they do some clearance. They are not going to tell you to clear that amount. Okay, you can decide to clear the amount if you have the money at that particular moment and decide to apply for 5 million again. But the bank can, but the main meaning of topping up is when the bank or the SACCO clears that loan for you. They do away with the old loan. Now they give you a new product of 5 million, but the amount that they are going to give you is not 5 million. They are going to give you 5 million less the amount that they are clearing for you, less the outstanding balance. I don't know whether you get me. They are going to give you 5 million less the outstanding balance. So they are going to clear this for you and then give you the remaining amount as now a loan. So you're not going to get the whole 5 million. All right. Now, but some institutions are not going to, of course, that one is not done for free. There is some charge. So they can tell you, now, this is how they normally do it, ladies and gentlemen. The outstanding balance, okay, let me write on this side so that you can see. I hope you have understood what I've written there. So this is how they do it. Outstanding balance is equals to 2.3 million. Okay, let me truncate that one in terms of thousands. The outstanding balance is 2.3 million. So for us to top up this particular loan, we are going to charge you a charge of 10%. So top up charge is 10%. 10% of what? Is it the original amount, or is it the outstanding balance of 2.3 million? Of course, they are going to charge you 10% of the remaining amount, 2.3 million. So 10%, 0.10 times 2300, that is 230,000. 230,000. All right. So they charge you a top-up charge of 230K. So this amount, whatever they are going to write off, what are they going to offset? It's called offsetting. What are they going to offset? They are not going to offset 2.3 million because they have charged you 230K. They are going to offset 2.3 plus 230, and this one comes to 2, that is 530. 2,530,000. So amount to offset. Amount to offset. Amount to offset is 2,530,000. Now, once they have cleared this amount for you, what is the, remember the amount that you're applying, the new product is 5 million. So what will be disbursed to you as a loan is 5 million, 5 million you less, that is 5,000 you less, so okay, we can take this one, amount disbursed. We can say here, amount disbursed, you can say is equals to 5,000 less 2,350. So what are you going to get as your money? So 5,000 minus 2,350. You are going to get 2,650,000. 650,000. So you are going to get 2,650,000. But ladies and gentlemen, remember, in that particular process, you have already lost 230,000, because if you decided to clear that loan from your side without involving the bank itself, without telling the SACCO to clear it for you, if you cleared that amount from your side, then you could not have paid this 230,000. Remember, this 230,000 have been included in this particular 5 million, the new loan now. So you are paying the whole thing here. Because if you are not paying, then it could not be there. You could have gotten something bigger than this. You could have gotten 2.7 million, but here you are getting 2,650,000. No, this one is not 350, it's 530. It's supposed to be 530. So if I did my calculation well, this is 5,000 minus 2530. So it's supposed to be 2470. Sorry for that. 2,470,000. So if you did not pay this, if you did not pay that, you could have gotten 2.7 million. But now, because you are paying this charge, you are getting 2.4 million. Remember, the amount that you had paid is 2.7 million. Remaining to pay is 2.3 million. But when you do a top up, you get 2.47 million. So ladies and gentlemen, that is the meaning of loan top up. Okay, it has its own advantages, it has its own disadvantages. One of the disadvantages is the extra charge that you are paying here. Remember, this is just loan application. If there are extra charges that you are supposed to pay, for example, the loan appraisal fees that are going to be fixed by banks and SACCOs, all right, you will also incur them in this particular loan. So it's going to be a little bit expensive as compared to if you had considered paying that amount from your side without letting the bank clear it for you. Because if they clear it for you, then they are going to charge you. But there are some individuals, for them to clear this particular, you go to Shylocks and borrow that money. And when you go to Shylocks, you borrow that money, you promise to return, then they are going to charge you a lot of interest. Now, the bank or the SACCO is going to charge you 10%, but Shylocks charge you 30%. So it's better when you come to the bank and they do a top up for you and they charge you that 10%. So ladies and gentlemen, it's going to have its own advantages, its own disadvantages. One of the disadvantages is that you are going to pay a top up charge, and it's quite a huge amount of money. One advantage is that you don't have to go around looking for money to clear. No, the bank is going to clear for you, gives you, disburses less amount than what you expected. So at least you still have some money in your pocket. So, but remember, for you to qualify for the top up of a loan in a bank or a SACCO, you'll have to meet some conditions. Some SACCOs will say, or some banks will say, you must have paid a half or probably 75%. Let me do away with this. Some financial institutions will say, for you to qualify a top up, some financial institutions will say, for you to qualify a top up, you'll have to have qualifications. Now, for you to qualify, you'll have to have paid probably 75% of original amount. Okay, now let's do a rough calculation here. 0.75 times 5 million is equals to what? 0.75 times 5,000. So you must have paid 3,750,000. So if we go with our original calculation, if you had not paid 3,750,000, it means you cannot qualify that top up. But it depends on that financial institutions. Some financial institutions will say, for you to qualify for that top up, you must have paid 50% of 5 million, which is equals to 250. Is it 5,000 divided by 2? Okay, 5, is it 2,500? 2,500. For you to qualify that top up, you must have paid 2.5 million for you to qualify for that. So whatever they are going to top up is the remaining 2.5 million. And for you to qualify that amount, the installments that you are paying must have been done consistent. I don't know whether that one is the correct English, but the installments that you are paying per month must have been paid consistently without any default, right? So there are going to be some tough conditions for this particular top up. So it doesn't come just like Saturday, hey, I need a top up, and then you get no. Now, others will say, if you have existing loans, and this one especially happens in SACCOs, if you have existing loans, then they must not have arrears. Those loans must be up to date. They must not have arrears for you to qualify them. So ladies and gentlemen, that is how you qualify for loans and top-ups in either banks or financial institutions. I hope today you have learned something very important to do with borrowing in financial institutions such as SACCOs and banks, to do with loan top-ups. So if you are there, you are watching me, and you have a loan in a bank or a SACCO, you need more money, you don't know how to get it, you can approach those guys, tell them, can you do for me a top-up, or do you normally give loan top-ups? And then they are going to guide you on how you are going to go with top-ups, and they are going to guide you from point A to point B. See whether it's good with you. Listen to their terms, listen to their charges. Some of them are going to charge even 30%. You see, there is no reason for top-ups. So you just go there, do your due diligence, ask before you jump into conclusions and say, oh, let me now wake up, Sir John Mweri has said. No, you have to do research so that you may not end up paying a lot of money in the name of topping up a loan. So ladies and gentlemen, that was my presentation for today. Thank you so much for listening. I hope you have understood what I've said. Remember, my name is Sir John Mweri, professional accountant with Ex-Finop Accountancy and Insurance Consultancy. And remember to hit the subscription bell, notification bell, share this video, leave a comment on the comment section as we continue. More and more information, very powerful to come. Stay subscribed, stay liquid.